We've been hoodwinked. We've been bamboozled.
The market got rugged out of nowhere, even though we were promised some form of a bullish green utopia, and it just never came. In fact, the market kind of puked, even though things look so incredibly good at market open today. And in this video, I want to be breaking down everything that happened and why the bulls kind of left, even though we all thought we were going to be rippity skippity doodah to the upside. So let me please take a second to break down what you might have just missed throughout the day today. But of course, before we get to that, if you enjoy these type of market breakdowns, don't forget to like, subscribe, all that good stuff. And with that being said, let's rock. When the world's largest casino officially closed on the day, here was the headline. S&P 500 closes lower, snapping a 3-day winning streak. When you look at it on the daily chart, it doesn't seem that dramatic. Granted, we did drop 0.3%, but that was after making a fresh local high, not that far away from the all-time high of 6,147. Looks like we clocked in around 6,060, so pretty good. But if you were trading it in the day, like day trading, scalp trading, whatever it was, it felt uniquely painful because in pre-market trading, the bulls were dominant. We got a nice inflation report. It was cooler than expected. We ripped, and myself included. I thought on SPX, we were going to be talking about 6,090 today, but like I said, we were hoodwinked. We were tricked. The SPY ended up dropping 0.3%, the NASDAQ dropping 0.34%, Bitcoin down to just below 109, down 1.3%, and then the small cap sector losing the most, down 0.4%. So let me take this in two major different chapters. Number one, why was everything so bullish this morning? And then chapter number two, why did we get rugged in the afternoon? So before market open, we had some really good news. This is from the president himself. Our deal with China is done, subject to final approval with President Xi and me. Full magnets and any necessary rare earths will be supplied upfront by China. Likewise, we will provide to China what was agreed to, including Chinese students using our colleges and universities, which has always been good with me. We are getting a total of 55% tariffs. China is getting 10%. Relationship is excellent. Thank you for your attention on this matter. So the TLDR there is the trade deal, seemingly good, massive deal. And then right after that, at 8:30 a.m., an hour before the market opened, we got the CPI report, the Consumer Price Index, which came in cooler than expected, as in inflation, better off than we wanted, and that sent everything to the moon. And you could see that in pre-market trading right here. SPY exploding, Qs exploding, even the Russell exploding, Bitcoin doing real good, almost at a new all-time high. And then all of a sudden, by the time the market actually closed, there was a lot more red in the heat map than there was green. So let's take a moment to really dive into why we went from seemingly so good, a US-China trade deal, and also lower than expected inflation, to all of a sudden, why did we end in the red? China-US officials reach agreement for following rare earth tech trade. Now it's up to Trump and Xi. So on the headline level, this all sounds really good, but all of a sudden when you get into it, you're going to realize that things were still a little bit up in the air. Trump says China will supply rare earths in a done deal. And then even the Wall Street Journal followed up on this. China put 6-month limit on its ease of rare earth export licenses. Tentative deal reached in London gives Beijing leverage in trade talks. The best way I could explain this is it's all this word right here, tentative. When everyone first heard the headlines, we all kind of thought it was a little bit more solidified than it actually is. US tariffs on China won't change again, according to Lutnick, but not long after that, he did have some interesting commentary. And let me prove to you, before we get into really the fact that this is still a little bit up in the air, let me just show it to you quantifiably. Here's a look at the S&P 500. The delta flow, as in the options market, the measure of the bullishness or bearishness in the options market, at 1030 peaked. Ever since then, going down. And what was even worse was the Mag 7, that old combination of Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla just diving pretty much all day. We peaked at 1040. We had a bit of divergence where price went higher and it just puked all day. So maybe my interpretation is right, or maybe it's wrong, but at the end of the day, what matters is what other traders are doing. And what other traders are doing is buying puts, but most importantly, getting out of calls. It might just be this argument, the old good old fashioned argument of profit taking. we've been on a tear ever since early April. And now with this gap up, maybe people figured, hey, time to hit the cash register for summer. Maybe this is right, maybe it's wrong. But what really matters is the fact that they were dumping calls all day. And now with that being said, this is why I think they were dumping calls. U.S. Commerce Secretary Letnick, there's no text on the deal, just an agreement after China's President Xi approves. So it's more of a handshake thing right now, and then things got even a little bit more murky. Percent trade negotiations with China will be a much longer process. So initial deal, a framework struck, but nothing really solidified. And if the debt limit is not sorted, it could be the biggest crisis since 08 to 09. So not really related to the trade deal, but once again, just something throwing a little bit of pessimism on the whole situation. That was once again from Basent. So maybe this is why people chose to sell their calls, why they chose to get out of their bullish positions. Like I said, maybe I'm right, maybe I'm wrong, but at the end of the day, what matters is starting at 1040-ish. That's exactly when people got into some puts, but mostly got out of all of their calls. Now, very quickly while I have you here, tomorrow before the market opens, we're going to be getting the PPI report, so please pay attention to that. I should also let you know we have some earnings going down right now. Oracle, big tech play, they did pretty well. Oracle shares climbed 8% as earnings revenue tops estimates. Might be worthwhile to throw on your watch list for tomorrow. Folks, that's what I have for you now. I hope you guys watching, unlike me, didn't get chopped to smithereens. My accounts are brutally red, but hey, there's always tomorrow. Just maybe I might be able to make it back. Like I said, I hope you fared far better than I did. And if not, maybe we'll be on this comeback journey together. That's what I have for you now. I'll catch you in the next one.